cigarettes are expensive, but the protection will be more expensive too.
Yeah, because the health things that's associated with cigarettes, man. And there's so much stuff in those cigarettes. I'm not knocking anybody for smoking or whatever, but there's so many chemicals and things in those cigarettes really that keep you coming back. And that's why so many people, it's so hard for them to quit, because of all the chemicals and stuff that's in it, that kind of that entice you to just keep on going back and just get you some more. It's crazy.
Yeah. Yes, that is
this
correct.
Phone rings one more time. I promise. this phone keeps ringing. I promise you, throughout the day, if I'm not doing the show, the phone doesn't ring. It's crazy, right? As soon as I get on the show, beep, beep, beep. It's crazy. Anyway, go ahead.
No problem. But yes, Shelton, it is something that we have to bring awareness to. We don't want to lose the home just because we get disabled. Not only that, the struggle and the impact, because, when it comes to money, it really puts a burden on the marriage and the family.
Yeah. Yeah. Or the lack of it.
Yes, and it does. Maybe, for other, it not necessarily needs to be a disability, and other people having, financial crisis just because they weren't accessorized correctly, just because they don't know how they can make their money work for them, or how is it that they can make an extra $2,000 a month, right? So, which that will be another talk later on, but
yes,
mortgage protection, it is something very important to bring awareness to, because it could definitely save not only your house, but your marriage, stay together, because it brings a lot of burden to the other spouse, significant other, and the kids that get to see all of that.
I think it's me and a friend of mine were talking the other day. I think sometimes to not have life insurance, if you can afford it, I think it's a selfish decision, because a lot of times, people, they don't keep it, or I get it because, I don't want those people wasting the money when I pass away or whatever. So I would say to that, get around some people that you know and trust that are going to do the right things. But if you're passed away, then that particular struggle is not yours to worry about anymore. You just put everybody in a position to benefit from some of your good choices while you were alive,
Yeah. Mm-hmm. Exactly. And going back to, and I'm going to make this clear, for example, going back to the example of this client, she had $100,000. She was able to access $20,000. Guess what? Her premium, what she's going to pay a monthly is lower, because now she only has coverage for $80,000, right? Whatever is left. So in case, whenever the time comes that she passes away, those $80,000 go to her beneficiaries.
Wow, so still there to go to the beneficiaries. So, okay.
Absolutely, absolutely. And it's something that you change, you change the legacy at a certain time, because when a tragedy happens like that in the family, it's not only the grieving process, but also getting back to the expenses that you have to pay back, because a lot of people go into debt for just a simple $16,000 for final expenses. You know what I mean?
Yeah, so it's expensive.
Mm-hmm. The final expenses that nobody expected. Nobody expected this person to pass away. Of course, we just don't know when. But take advantage, everybody, please take advantage of your age, where you're at, because the older you are, the most expensive it's going to be. So take advantage at your age that you're at right now. Don't procrastinate. Oh, I'm going to get it next year on my next birthday. I'm going to get it, when I get a raise. I'm going to get it when I change my job. It's do it as soon as possible, because we get the process started for you. We can do it over the phone. We can do everything electronically signed to your email. Right? Guess what? Not only that, Shelton, there's a nurse that needs to go and check, their health, that they're in good health. That usually costs about $300. The company waives that and does not charge the client anything.
Wow.
Zero. It's a free physical, right, to make sure everything's in good standing with their health. Of course, once we, speak with one-on-one basis, what is it, your health issues, what is it that you have, diabetes or high blood pressure, it doesn't mean that you are not qualified for it, right? I've gotten some clients that qualify for it. You pay a couple dollars more, but hey, ultimately, the company knows you have this condition, you're going to pay a little bit more, but you still have the coverage of mortgage.
That's excellent. I mean, that's a great option to have. I mean, I think with the physicals and stuff, though, it kind of protects the company and also protects the client. So I think that's a good thing to have, with the physical, because you kind of want to know the kind of health that you're in and kind of give yourself a free checkup, if you will. If you're not a person that goes to the doctor a lot, right? Almost kind of give yourself a little free checkup there, if you will, to check the numbers and make sure everything is good.
That everything is good, absolutely. But one thing that I didn't touch base is on the beneficiary. So, yes, it is called mortgage protection, but it necessarily does not go directly to the mortgage, okay? So we need to make that very clear.
Right.
Because if you get, this, as soon as the family closes on a deal on the house, the banks are going to be sending letters, hey, you need to protect your home, you need to protect your home, right? Protect your home. They're sending you letters left and right in your mailbox about getting mortgage protection. If you do it directly with the bank, or you have done it in the past, if you guys are listening, you do it in the past, check who is your beneficiary. Because if you do it directly with the bank, guess what? The bank puts themselves as the beneficiary. Okay? Let me explain this as an scenario. So there is $250,000 in coverage to protect, right, the mortgage and protect the family. And this will be the scenario if the banks will be the beneficiary. The loan is, since you're paying it off over the years, your loan went from $250,000 down to $150,000, right? Went down to $150,000. So if your bank is the beneficiary and you pass away, the entire $250,000 of coverage goes to the bank.
The whole face value.
Even though you had an extra $100,000 that you lowered your mortgage by. That is insane. So
banks win again.
Exactly. If you have done that in the past, you know what? One, I want to compliment you and I want to applaud you because you took action.
Right.
But now is getting informed as to who is your beneficiary. Who is it that's on there as beneficiary? And, another story, because I have so many stories, Shelton, since I've been doing this for so long.
Yeah.
I went to go visit a client, and they were doing a savings and retirement accounts, but they also had a mortgage protection. And they would tell me they have mortgage protection. I'm like, you know what? I want to go over it with you. If everything's in good order and, you've had it for so long, I just want to look at it. You don't have to change it over with me or with any of the companies I work with. Shelton, they did not have a single copy of the contract. A single copy of the contract.
Wow.
I was asking them, who's the company? They're like, I don't know. Okay, who is the insured, yourself or your wife? I don't know. Who is the beneficiary? I don't know. Who provided it for you? Well, the bank, and we just signed, and that's it. Can you believe that? They didn't have paperwork.
I can't believe it. I can't believe it. There's so many people out there that's preying on what people don't know and a lack of information. So, yeah, I definitely can't believe it.
And it's something that I was like, okay, Mr. and Mrs. Client, you need to, first call your bank and tell them to send you a declaration, a page of declaration to see, all the information in case I ask them, okay, so if something happens to you tomorrow, who are you going to call? And they're like, yeah, you're right. I'm like, exactly. Just get, your stuff together, your paperwork together. And in this case, going back to the scenario of the mortgage and beneficiaries, I'm pretty sure in their case the mortgage was the beneficiary because they got it through the bank. I'm pretty sure. So even though they lowered the payment, the mortgage would keep the difference. They wouldn't say, oh, Mrs. Client, here's an extra $100,000 out of the kindness of our heart. The bank is not going to do that. Okay? So we need to check beneficiaries. Yes, you started with $250,000 because your mortgage is that amount, but over the course of the year, your mortgage goes down.
Yeah,
right?
Exactly. You're paying it.
And you're paying it. And if you only owe $150, right, you have your spouse, you have your loved ones as beneficiaries, they get the full $250. Now your spouse, living spouse, decides what to do, either to pay off the whole mortgage or, save it and keep going month by month. Do whatever. In other words, do whatever needs to be done. You decide, because the check is solely in the name of the beneficiary that you designated, that you signed on.
That's
so
awesome.
It's very important, to know all of those facts. And every so often, so if you do have it, review what you have every 3 to 5 years, because we're so busy and tied up with work and 9 to 5 and going here and going there that we may forget what we have, right? So every 3 to 5 years, review your stuff. Go over it, stay with another professional, get a second, third opinion of what you have, and make your educated decision on how you want to move forward.
That's great advice, though. Make sure that you get an educated decision from more than one source, and make sure that you're getting the right numbers, and check your options, because, again, this is finances and payments that's going to come out of your paycheck, come out of your bottom line. So you want to definitely make sure you do the proper homework in reference to getting the coverage that you need, because sometimes you may have too much coverage and sometimes you may not have enough. So, like I said, it's a great option.
Mm-hmm. Exactly.
That's good. Mortgage protection. I like that. What would you say to those that really doesn't see insurance as a viable option? Because I think I put a post on social media the other day: phone insured, house insured, car insured, life insured, question mark. What would you say to those, that really don't see the benefit of having a life insurance or mortgage protection in this case?
One of the things I would say is, I don't know how to stress it enough, because everybody is very strong on family beliefs, right? Or I don't believe in life insurance. You know what my response would be? You don't have to believe in it, because it's not a religion, but you do have to protect your family in case something happens, right? And I'm really strong on protecting family and loved ones, because it's hard to see or hear how we spend so much in going out to eat, how we spend so much in other things, other recreational stuff, where for a fraction of that, you can have protection for more than what you expect, right? Just think about going to the movies. And one time I went to the movies, Shelton, and for the first time we took all of our kids, which is 3, right? 3, my husband and myself, 5, right? And it was, close to $100.
Yeah.
On one Friday night, $100.
One Friday.
And my mortgage protection is $32. $32, the one that I have. I was like, oh yeah. I mean, we don't go to the movies often for that specific reason, because it's $100 for all of us to go, right? But we do take them other things. Going to Walmart, we just go to Walmart and we just buy random stuff because just we feel like it.
Yeah.
You see what I mean?
Yeah. I mean, that's because you have the option.
And again, I'm not nobody to judge nobody. I do it myself. I'm just bringing awareness as to how inexpensive it is, because 70% of people overestimate life insurance by double. They think, oh, I don't have money to pay for it, where they think it's going to be $100+. Whereas, like, you can have really, some protection. To get some protection, it's better than no protection at all.
Right.
So, get your information. Getting a quote does not hurt. Being known, your age, of course. It's something really funny, and I'm going to, finish with this story, too,
Okay.
is I was sitting down with the client. He's now 46. And he's like, oh, yeah, I got, that mortgage protection years ago. It's only about $20, $30. Yeah. I'm like, oh, okay. So I was, thinking, well, he just wants, because I knew his age is not $20 or $30. He's 46. So I was like, okay, how long ago was this? He's like, oh, he was telling me $500,000. He's like, oh, yeah, I got a quote for $500,000 for $20, $30. I'm like, $500,000, that's a whole lot for $20, $30